Imagine you're standing at the edge of a cliff, looking down into an abyss. That's the kind of warning we're talking about today on Investify. We're delving into the stark warning from Jeremy Grantham, a name that echoes across the halls of investing. Jeremy Grantham isn't just any investor, he's a legend in his own right. He's the guy who can smell a market crash from miles away, and right now, he's sniffing something big. Grantham is sounding the alarm bells, warning us of a potential market crash that could shake the very foundations of our portfolios. Let's rewind and understand why Grantham's words carry so much weight. He's drawing disturbing parallels between today's market conditions and some of the darkest days in financial history. Think about the crash of 1929, a day so infamous, it's etched in our collective memory as Black Thursday. On that day, the market lost a staggering $4 billion. Fast forward to the year 2000, the dot-com bubble burst, sending shockwaves through the financial world. These aren't just dates in a history book, they're cautionary tales. Fast forward to 2021, a year that saw the market take a 10% hit. That's enough to make even the most seasoned investors sit up and pay attention. But Grantham isn't just concerned. He's predicting a 70% chance of an imminent market crash. That's not a number you ignore. Let's put this into perspective. The Great Depression began with a loss of $4 billion in a single day. That's like watching the floor disappear beneath your feet. And then there was the dot-com bubble in 2000, a time when tech stocks soared to dizzying heights before plummeting back to earth. We've been here before, and it wasn't pretty. Now, let's bring it back to the present. The market is currently flirting with all-time highs, a scenario that sounds good on paper, but is fraught with danger. It's like standing on a peak, not knowing if the next step will be on solid ground or thin air. But hey, if you're enjoying this deep dive into market dynamics, don't forget to hit that subscribe button. We're all about unraveling the complex world of finance here at Investify, and we'd love for you to join our community. So, what do these warnings mean for you, the investor? Is it time to panic, or is there a way to navigate these turbulent waters? Stay tuned as we unravel Grantham's insights and what they could mean for your investment strategy. As we venture further into the thicket of market predictions, let's focus on what Grantham sees on the horizon for 2023. He's not just looking at a storm passing through, he's talking about a recession that could extend its stay well into next year. That's not just a summer squall, it's a prolonged winter freeze in economic terms. The domino effect of this anticipated recession could see stock prices and earnings tumbling down a steep hill. Imagine watching the numbers on your investment portfolio shrink, like leaves falling off a tree in autumn. That's the kind of decline Grantham is foreseeing. In light of this, Grantham advises a cautious approach to investing in the current market conditions. It's like walking on a frozen pond. Every step needs to be calculated and sure-footed. This isn't the time for reckless financial adventures, but for thoughtful, strategic moves. Now, let's zoom in on the S&P 500, a benchmark that many of us keep our eyes glued to. Grantham's crystal ball is showing a potential drop of over 50% in this index. To put that in perspective, he's suggesting the S&P 500 could plummet to around 2,500 points. That's a descent that would make even the bravest investor's heart skip a beat. But what's fueling this foreboding forecast? Two words: debt and interest. The US is staggering under a colossal $33 trillion debt. Combine that with rising interest rates, and you've got a recipe for economic turbulence. It's like carrying a backpack full of rocks uphill. Every step gets harder. And let's not forget the real estate and mortgage sectors. They're not just facing challenges, they're in the eye of the storm. With the current scenario, investing in these sectors might feel like building a house on quicksand. Now, let's shift our focus to a less discussed but equally crucial part of the market: the Russell 2000 Index. This index might not make headlines like the S&P 500, but it's a critical barometer of the US economy, especially its smaller companies. And here's where Grantham raises a red flag. He points out that the Russell 2000 is teeming with what he calls zombie companies. These are firms that wander in the land of the living dead. They're operational, but have no positive earnings. Astonishingly, 40% of companies in this index fall into this category. But what does this mean for the Russell 2000? Grantham predicts a potential plunge below 3,000 points. That's a descent into a valley that many investors might find hard to climb out of. This isn't just a bump in the road, it's a potential sinkhole for those not paying attention. And now, let's talk about the giants, the magnificent seven of the stock market. We're talking about Apple, Microsoft, Amazon, Google, Nvidia, Tesla, and Meta. These aren't just companies, they're empires. Their performance doesn't just influence the S&P 500, it practically steers it. When these giants move, the market moves with them. But here's where Grantham throws a curveball. He's not just impressed by their size and might, he's questioning their sustainability. Can these titans keep growing at their current pace, or are they headed for a clash with regulatory giants? It's a game of financial chess, with high stakes and uncertain outcomes. And if you're finding this analysis as intriguing as we do, make sure you're subscribed to Investify. We're all about peeling back the layers of the market, giving you insights you won't find anywhere else. As we navigate through the fog of market predictions and warnings, let's anchor ourselves with some solid investment advice from Jeremy Grantham. He's not just about sounding the alarm, he's also about offering a lifeline. Grantham's guiding light in these turbulent times? Global index funds. He advises looking beyond the tumultuous shores of the US market and setting your investment sails towards more stable waters. Grantham suggests turning your gaze towards developed markets like the UK, Japan, and Europe. Why? Because these markets offer a different kind of stability and potential growth, untethered from the unique challenges facing the US market. It's like diversifying your diet. You can't just live on burgers and fries. But Grantham's advice doesn't stop at geography. He emphasizes the importance of quality in investment choices. This isn't about chasing the next big thing or getting swayed by market hype. It's about finding companies that stand on solid ground. So, what does Grantham mean by quality? Think low debt, high stable returns, and lower risk and volatility. These are the hallmarks of companies that don't just survive market downturns, they thrive in them. A prime example? Coca-Cola. It's not just a brand, it's a symbol of consistent performance. Investing in such companies is like choosing a sturdy ship in stormy seas. Quality investments are the safer option during market downturns. They're the financial equivalent of a steady hand at the wheel. When everything else is swinging wildly, these investments maintain their course, providing a beacon of stability. And finally, let's consider Grantham's long-term perspective. He's not just playing the market for quick gains, he's in it for the long haul, advocating for investing in fundamentally strong companies. These are the businesses that have stood the test of time, proving their worth over a century. Grantham's philosophy is simple yet profound. Focus on the consistent value of quality investments. In a world of financial noise and fleeting trends, this approach is like finding a true north on your investment compass. As we wrap up this deep dive into Jeremy Grantham's market insights, remember, investing isn't just about following trends, it's about understanding the currents beneath them. If you found value in our discussion today, don't forget to hit the like button and subscribe for more insightful content from Investify. We're here to guide you through the complex world of investing, one video at a time.